Peter Attard Montalto joins us now from London to share his views on the company's implosion, perhaps no better word than that. Thanks to Peter for joining us. Peter, the ABIL, from your perspective, the ABIL issue, we've talked it, there were three big issues we said this morning, the business rescue for Ellerines, then the announcement of the resignation of Kirkenes and the results, that 8.5 billion rand hole, and then of course the Reserve Bank and the curatorship. Very close to it here in Johannesburg. What's your perspective? I would think a cooler perspective from London.
Well, if you simply looked at the currency or the interbank rates this morning, you wouldn't guess that basically a bank had collapsed in South Africa. So, I mean, there's definitely been calm, and foreign investors have largely ignored the issue. I think that can't last forever. Investors in the past have been very interested in the unsecured credit story, but also I think people have done their homework to some degree. People know that Capitec, for instance, is a very, very different beast, that the way the big five banks treat unsecured credit is done in a very different way with very different risk metrics than they were done at ABIL. So yeah, it's been a sort of a weird calm sitting from outside looking in, but arguably this was a long time coming, given ultimately a totally undiversified and unsustainable business model.
Peter, it's Tumisho here. What do you make of how the South African Reserve Bank has handled the situation? This is not the first time we're seeing a central bank step in. We've seen something very similar happen with BES. Perhaps from an outsider perspective, how does it look in how South Africa is managing the current situation?
Well, we understand now from the speech by the governor on Sunday that actually the SARB was more involved in shaping what ABIL was doing behind the scenes since 2012. Arguably, other regulators, such as national credit regulators, should have taken a much firmer stance much earlier on. And it's easy to say these things with hindsight, but maybe the SARB should have been somewhat more aggressive as well. But in terms of the actual bailout, I think, and the splitting into a good bank and a bad bank, the SARB has been quite novel in how it's basically formed a consortium of banks to underwrite the capital of the new good bank, and indeed in how the curator has been set up to deal with the bad bank. And I think overall, there's been a lot of stories, a lot of questions I get, particularly from locals, around, is this political, is it nationalisation, is it going to be a state-owned bank? And I think that entirely misses the point, which is basically that the SARB had to act to secure financial stability to some degree. They have managed to get away with huge write-downs for equity holders, obviously, but also unsecured debt holders and even senior debt holders who will see a 10% write-down. So, yeah, the pain definitely is being felt in that perspective. It's not simply capitalists getting off scot-free or anything like that.
Peter, you mentioned the timing of it, and it's easy in hindsight to say what should have happened. The role of the board perhaps should have had more of a spotlight than it has had. We are told that Leon Kirkenes did offer his resignation earlier. There were 3 or 4 earlier bad points where the pressure was on ABIL because of surprises, bad surprises for the market. The board apparently refused his resignation. Could the board have done things differently?
Well, I'm looking at this very much in a sort of top-down financial stability perspective as opposed to as an equity analyst. But, I think it was clear that the business model wasn't sustainable. There should have been more diversification, which was a strategy that Capitec undertook. And arguably, it's the board's job to set those kind of strategies for a company over the long run, to stand up to management if they don't want to do it. And let's not forget, of course, that Ellerines was ultimately bought simply to expand the pool of unsecured credit that could be offered. And that kind of, if you like, doubling down on the situation should have, I think, struck both regulators and the board as being quite an intensive, risky strategy.
Yeah, I went back and looked at what they said in 2007, I think it was, when they took Ellerines. They expected Ellerines to be in profit by 2010, and we're now 4 years later, and it's, of course, in business rescue. Just on the way the central banks behave, Peter, the too big to fail argument. I see there's a story floating around in the British press this morning that argument keeps coming up. Should big banks be left or told that they will be left to fail if they do things badly? Have lessons been learnt? I mean, I think South African banking sector certainly watched with great interest and have learned things here. Broadly, have the big banks learnt their lesson?
Well, I think it's important to say here that ABIL wasn't too big to fail and has failed. There have been huge write-downs, as I said, to equity and debt holders. So this isn't a case of some massive bailout to maintain existing operations or to prop up existing management or anything like that. So ABIL has failed, and the system so far, at least, touch wood, has been able to absorb that. Although of course we have to see fully the impact on the big banks, their debt exposure to the company, all that's meant to be small, as well as some of the money market fund issues as well. But I think there's an interesting conclusion that's coming out of this that we have to watch. Is basically there seems now to be a kind of idea of circular insurance within the South African banking system, whereby other banks have been asked to provide this underwriting of new capital for a good bank. That might in the future create some perverse incentives, some interesting sort of views around how banks and financial stability is interlinked in the South African banking system. We're going to have to watch that very closely. It's still too early really to draw a firm conclusion on that, but that is one of the possible issues as a side effect of this sort of too big to fail argument that's gone on with ABIL.
Thanks as always to Peter Attard Montalto, emerging markets economist from Nomura. His views there on ABIL.